What's up, Facebook? Ty Crandall here with Credit Suite. So today we're going to be finishing up our last live stream dealing with credit scores. So what we've talked about so far is we've talked about two of the three types of credit scores you have as a business owner. We talked about bank credit scores you'll never see. You'll never even know what your bank credit scores are because they're only available with the big banks. We've talked about business credit scores. We decoded Dun Bradstreet's credit scores. We decoded Experian and Equifax's credit scores as well. Today, we're going to decode your consumer credit scores. We're going to talk about all different kinds of things, from the score that is looked at when you apply for a mortgage or when you apply for a car loan, to the different credit scores that are out there that you probably don't even exist. We're going to talk about the credit bureau's own credit score that they have, that you may not even know that when you're looking at a credit report, it has that score and it's not your Fico score. Today, we're going to go through it all. And we're going to wrap up our final live stream on credit scores. And then in the weeks to come, we're going to jump back into business credit. We're going to talk more about business credit in the weeks to come, how to build business credit. We're going to talk about how to get these business credit scores in real time. We're even going to look at real business credit reports in the weeks to come as well. But for today, let's decode this third of credit score. So we've talked about three types of credit over the last 2 weeks in the past, and this week being the third. We talked about your bank credit scores. We talked about how your bank and how much money you ultimately have in the bank determines what your credit scores will be. If you ever want to get a loan at a big bank, you've got to have at least 10 grand in your account. Nobody will lend you money on the business side if you don't have a low, mid, or high 5 score. We decoded this in the last couple weeks. You have less than 10 grand in the bank, you have a 4 score that's unlendable at most conventional banks. And we talked about a bunch of different factors in the past that affect your bank credit score, from non-sufficient funds to having more money come in your bank than go out, to consistent deposits, to how long you've had your bank account, to other bank products you may have. We also decoded your business credit scores, and we talked about all three of them being D&B's credit score here, which the payments are based strictly on how you pay your bill, determines your score. Equifax, which again is the exact same, your actual score determines, or your score is based on how you pay. We also looked at Experian, which takes many things into account, but 85% of this score is based on how you pay. So again, we really looked at business credit scores, all three main scores with D&B, Equifax, and Experian, and how they're ultimately all based on payment history. Then we talked a little bit more about other scores you may see on your business credit reports, primarily dealing with supplier credit scores, and then also having to do with these type of failure scores, which are ultimately used to determine if you're going to claim bankruptcy. So those are your business credit scores. Quick overview. If you want more info, go to our Facebook page. We'll give you like a full 30-40 minutes that we went over these banks credit scores and business credit scores. Today, we're talking about the third type. The one that you're most familiar with, the one that's most important, which has to do with your consumer credit score. We're going to talk about Vantage, the credit bureau score. We're going to talk about Fico, the actual score that comes from the company Fico, which used to be Fair Isaac and has now updated their name, I don't know, a decade or so ago. So here's how your Fico score breaks down. And you might have seen this before, but we're going to look at it at an intricate level that most people have not seen this. So we'll take a look at each aspect. So there's 5 components to your Fico score. A lot of people already know this part of it. Payment history, utilization, length of credit, new credit, and credit mix. This is what comprises up your Fico score. It's definitely different than Vantage score, which is a credit bureau score, which we'll talk about in a second. So 35%, the biggest factor of your credit score is how you pay your bills. Now there's 3 aspects to this part of the score. Recency, how recent are the late payments you have? The older the late payments that you have, the less adverse impact to your score. Paul, welcome. These are welcome, man. I haven't talked to you in a while. It's good seeing you. Frequency, how frequent are your late payments? How often are you late? Severity, how late are you? Hey, Paul, I saw some Facebook streams from you going on. Look pretty cool. I like what you're doing out there. Severity, how late are you? A 120 or a 90-day late obviously adversely impacts your score more than a 30-day late, for example. So payment history is the biggest aspect of your score, how you pay your bills. The second biggest aspect is called utilization, sometimes referred to as different things. It's 30% of your score. How much of your available credit are you actually physically using? What percentage of your available credit are you currently using. Now, with the utilization aspect, you know, there's something that's always been said that anything over 30% of the limit of an account that you're using will damage your score. But if you really look at experts in the space like John Alzheimer, who's one of the smartest guys I've ever known when it comes to credit scoring, they'll tell you that you really want to keep your utilization as absolutely low as possible, below 2%. So that means if you have a credit card with, you know, $1,000 limit, you definitely want to keep it below, or let's say $100 limit, you definitely want to keep it below $30 or 30% of that, or you really want to have no more than even $2 on that. Or if it's $1,000 limits, no more than like, you know, $20 on that, for example. So you really want to have less than a 1 to 2% utilization on any credit card to max your score. Definitely not more than 30, or that can really adversely affect your score. Look at this. We look at how much of your credit you're actually using and the percentage. And it takes into account percentage of overall accounts and percentage of individual accounts. So we see this all the time on the business limit. Well, actually, let me go back. On this product here that's based strictly on your credit scores, where you can get up to $150,000 in unsecured financing, we see people get a fraction. And we looked at this and said, you could usually get, let me see if I can find this, 5 times the amount of your current limits. Well, if you're overutilized on even one account, you may only get 2 or 3 times the amount of approval of your current limit. So if your current limit's 10 grand and you could get 50 in this kind of financing, you might only get 20 grand or 30 grand just because you have one credit card that's overutilized, one credit card at 50, 70% utilization. So it can really impact. I mean, literally, we've seen this cost people over $100,000 in potential financing because they have one credit card that they overutilize. This is exactly why you want to make sure that you get business credit accounts like these that only report to the business credit reporting agencies, because these will not adversely affect your consumer credit score. This type of credit that we've talked about before with business credit, this type of credit doesn't report to the business credit reporting agencies. Remember, you're not providing a social. There's no credit report reporting on the consumer side. There's only business credit reporting. So this is the type of credit that you can use. You can get all these kind of accounts for your business, can get tons of access to credit. There's well over 200,000 this one person, Christine, has received. Mark is often on our live streams too, and he's really racking up some credit. So you can get this kind of credit without it reporting on your personal credit reports, so you can max these credit out and don't have an adverse effect, which is a big deal because utilization is a third of your score, almost as important as if you pay your bills on time. Length of credit has to do with a couple different aspects. What's the age of the oldest account you have on the credit report? What's the average age of all of your accounts? Those two things per FICO will determine the length of credit history you have, which is the third aspect of your score. This is tough because you can't fake it. Like, you either have credit for long term or you don't. There's one hack you can use though. It's called authorized user accounts. So if you have a family member, friend, for example, that will put you as an authorized user on the credit card and not physically give you a credit card, well then if they've got a credit card in long standing, well then that could give you a longer credit history and can help that aspect of the score. But here's the best part. Had the account open for a long time, then it's got positive payment history, it's got good utilization, it's got good length of credit history. Well, that could help your score at 80% of your overall score. Just by getting added as an authorized user, you improve this part of the score, which is very hard to control, and then you improve these two parts, so 80% of your total score could benefit from an authorized user account. The fourth aspect of FICO score is new credit. Joe, welcome, man. Thanks for coming today. 10% of your credit score has to do with new credit. It has to do with all these different factors. What's the number of accounts you've actually applied for? What's the number of accounts that were opened? So you can see that FICO is looking at how many you applied for versus how many you really got approved for. And what they're saying is that if you applied for a bunch and didn't get approved for a bunch, well then that could indicate in itself a problem and could lower your score. The time passed since you opened and applied for new credit. This all has to do with this new credit aspect of the FICO score. So the bottom line is, the older your inquiries are, the less impact they have on your score. The fewer inquiries you have related to accounts that actually open, the better you are. If you have a bunch of inquiries and few accounts open, that can hurt your score more than if you had a bunch of accounts that you applied for and got those accounts approved. And also, mortgage and auto scores within a 30-day time frame only count as one inquiry. Yes, they will show in your credit report as multiple inquiries, but to your FICO score, they only count as one. Auto and mortgage do. So very important here. You don't want to apply for a bunch of credit in a short period of time. The more recent the inquiries, the more damage to your score. I find that individual inquiries don't hurt your score. Groupings or several inquiries in a short period of time do. And if you're going to apply, try to always apply when you think you're going to get approved, because if you apply for a bunch, don't get approved, and get the accounts open, that could adversely affect your score as well. Abu says, I have a business open for 3 years. I have business loans I received. How do I get credit cards? For business credit cards, we're going to talk more about that in our So actually next week we're going to jump back into business credit, and I'll talk to you more about how to get business credit cards without a personal guarantee and without a personal credit check. I don't have time to jump into this today because it's too broad of a topic to cover. But if you come tomorrow or 11 o'clock next Thursday, we will be diving in, be getting back into business credit, and I'll tell you exactly the steps that you can get business credit cards for the business without the personal guarantee or credit. So the last part of the FICO scores credit mix. What mix of credit do you have? No problem, Abdul. I look forward to seeing you next week. So you have to have or should have 3 cards or more. You should have 1 to 2 auto loans and mortgage loans, and 1 to 2 regular type of loans. If you have more than these numbers, car loans, mortgage loans, and regular loans, you can hurt your score. If you have less than 3 credit cards, you can hurt your score. So when it comes to FICO, and there's a lot more we're going to cover today, guys, but FICO, here's how it looks. Payment history, 35% of your score, biggest factor. Utilization, 30%, second biggest. Length of credit history, my writing is horrible here, as you can see. 15% of your score. New credit and credit mix are both 10% of your score. And remember, we talked about all the subsections of that. How recent are your late payments? Frequent are they? How severe are they? Your utilization, how much of your available credit are you using? What percentage? What's the age of your oldest account and the average age of all your accounts? So some tips here, right? Pay your bills as agreed. If you have negatives, get more positive accounts on your credit report to offset the older negatives, right? Utilization, keep your balances in relation to the limits as low as possible. Get an authorized user account if you don't have old credit, and don't close your older accounts, because the average age of your accounts can change adversely if you do. Make sure you don't apply for a bunch of credit in a short period of time, and try to only apply when you know there's a good chance to get approved. Okay, that's how you impact this aspect of the score. Try to get 3 credit cards or more, and also make sure that you have at least 1 to 2 auto home loans, 1 to 2 other type of loans. That needs to be your goal you're working for. If you've done this, then you're going to have a good FICO score. Now there is, and this is what a good FICO score is. Per FICO, you're excellent if you're over 750, you're good if you're 700 to 749, fair if you're 650 to 699, poor credit if you're 600 to 649, and you are bad credit if you're 599 or low. That is how FICO breaks down their score. Now guys, Vantage Score is a little bit different. Now Vantage Score is, and this has changed recently, but I want to show you the older version of Vantage, because I see some people that still ask about this. Do you have a credit repair business? I do not own a credit repair business. I built a credit repair business and sold a credit repair business. I'm probably one of few people that you'll talk to that can actually say that. Like, I built a successful credit repair business and sold a successful credit repair business. So if you're looking for credit repair, I'm not your guy. But Paul is on this live stream. Paul does own a credit repair business, and from what I hear, he's phenomenal with what he does. So if you need any kind of credit repair services, just say, hey, Paul just went ahead and typed in his name in here. Then just, you guys right now on this live stream can communicate, and he can definitely help you with consumer credit repair. But again, since I built and sold a credit repair business, since I've spent 17 years in financial services, I happen to know a lot about consumer credit because it ties in to what we do. So Paul just typed his that message. So Quentin, you can connect with Paul if that's even why you're asking, if that helps. Okay, so that being said, Vantage Score, here's how Vantage Score works. 32% of the score is payment history versus the 35% with FICO. 23% utilization versus the 30% with Fico. They have a category called balances, it's 15% of your score. They have a category called depth of credit, which is 13% of your score. How your recent credit is 10% of the score. Available credit is 7%, okay? So that being said, it's definitely different than Fico. Now, this is an older look. Now, Vantage just changed their score to have a 300 to an 850 high like Fico has. But this is what their score used to look like. And you'll still see this out there with some sources. A credit 900 to 990, B credit 800 to 899, C credit 700 to 799, D credit 600 to 699, F credit 500 to 599. So it's possible for you to have a 700 Vantage score with this older model and have C credit, whereas here you'd have B credit, right? So you definitely don't want to be full. Now, so you should look into it. If you're going to get credit monitoring, guys, what you want to do is you want to check with a credit monitoring source. Email them or call them and ask them what credit score they use. Do they use Fico or do they use Vantage Score? If they don't know, call and talk to somebody else. Get the right answer. And here's why. Most lenders use FICO score. Most lenders do not use Vantage Score. So you don't want to pay for credit monitoring and use credit monitoring that gives you credit score that most lenders aren't even going to look at. You want to access the score that most lenders are going to use, which is FICO. So because of that, make sure you ask the credit reporting agencies through email or on a phone call what model they use. Do not go with ones that use Vantage Score is my advice. Go with ones that use FICO score because that's what's most widely used by credit issuers today. Paul says, who checked out Vantage Score? I'm not exactly sure what that question is, but if you clarify, Paul, I'll be able to answer that. So we talked about how your credit score works in depth. We've broken it down. We've even looked at it in a little pie format with horrible writing. We've also looked at this little known about Vantage Score, which is offered by the Credit Bureau. Credit Bureau tried to get into this space and tried to steal market share from FICO, but they came out with this ridiculous. This is ridiculous. All lenders, all of us that have been in lending for decades, will not ever understand a 750 credit score to not be good credit. And in this world, they had that as 7C credit. So because they were so far off the mark, Vantage just tanked, man. Vantage was just never popular with lenders. So you want to avoid it. My advice is to try FICO. This just never really went very far with credit bureaus. Okay, so next thing we're going to talk about today is called scorecards, okay? And with scorecards, whoa, Mr. Rob Ellerman's joining us today. I'm honored to have Rob on the post today. It's awesome. Welcome, Rob. So with scorecards, this is how scorecards work. Ultimately, each industry has a desire to have information that's more relevant to their lending practices. So for example, if I'm a mortgage lender, what I care most about on your credit is how you pay your past mortgage bills. If you have a mortgage, did you pay it as agreed? Did you pay it late? How late did you pay it? If I'm an auto lender, then what I care about most is I care most about how you pay your past auto history. Do you pay your bills on time for your car loans? Do you pay them late? How late do you pay them? How early do you pay them? Okay. So that being said, and thank you guys, everybody who just shared the video. I really appreciate that. So that's what scorecards are. Scorecards are basically designed for individual industries that allow these industries to assess or weigh different aspects of the person's credit heavier into the overall score than every other aspect. So an example of that I talked about before is Dun Bradstreet. Dun Bradstreet's business credit score, their PAYDEX score, which is the most commonly used credit score in the business credit scoring world, uses this exact same thing. It's called weighted average. So for D&B's PAYDEX score on the business side, here's how it works. These are real approvals that a client actually has obtained. So let me give you an example. This account from Tractor Supply only has a $5,000 limit. BP has an $8,000 limit. This account, because the limit is higher, weighs higher into the PAYDEX score or means more than this account. So if you were to ever go late, you'd want to go late on this account first if you ever had to, because this account has less of an impact into your score than this. Well, that's exactly how scorecards are. Scorecards are exactly the same way. So for example, if you have a bad mortgage history, if you have late payments, even a foreclosure, then you could pull your credit monitoring score, and your credit monitoring score might be a 620. But then when you go to apply for a mortgage, your score might be 580, 570. It's typically going to be lower than what you'd see on a regular credit monitoring score because your mortgage score cares more about that damaged business or damaged mortgage history. So let's look at that at the opposite. Let's say you go to apply for a home loan and you've got great payment history. You've got multiple mortgages with perfect payment history in the past. Okay, well, in that case, then what happens is that your mortgage score could be higher than what you could pull on credit monitoring. Maybe you pull a 650 score on credit monitoring, and now your mortgage score is a 670 or a 680 because, again, it weighs your mortgage history heavier into the score than anything else. Now, I'm not really sure how many scorecards there are. I've seen 16 at one point in time, but again, I really don't know exactly how many that there are because I believe that changes quite often. But I will tell you that there's an auto industry option score, a mortgage industry option score. There are also ones used for many other industries, including credit cards. Now, Quentin says, what about banking? Well, bankruptcy won't be looked at heavier or weighed higher into any of your individual scorecard scores. But the reason I'm telling you about this is because you should know that you're going to have all different kind of credit scores. You could go in today to get a car loan and a mortgage, and the mortgage broker will pull a different score than what the auto dealership pulls, even though both of them are pulling a TransUnion Fico score, for example. And a lot of people wonder this. Why do you have so many credit scores? Why do what you see on credit monitoring be different than what you'll see when you apply for a car loan? Why is that different than when you apply for a credit card or a home loan? Why are all these scores different? I just told you. There's actually two reasons. The main reason, well, there's three. One of the reasons is that each credit bureau has different information about you. You might have some accounts reporting on TransUnion that don't report on Equifax and Experian. So because of that, the credit bureaus have their own version of the FICO score they use, so it's going to be a little different, but they have different information they're reporting on you. That's why your scores would be different, which is one reason. The other is these scorecards. It's the fact that the industries have their own score that they're looking at, which is why, again, if you apply for a car loan and a mortgage in the exact same day, your scores would be different because they weigh the history that's relevant to that industry heavier into the score than anything else. So some of those are the main reasons. And again, another reason be maybe you're looking at a Vantage credit score on your credit monitoring, but the lender's using a FICO score. So all these things are important to know because all these things will determine why your scores are so different from place to place. What you need to know is that, first of all, if you have any inaccurate information on your credit report at all, you need to get with a reputable credit repair company to be able to have that fixed. I don't do credit repair. Okay, Paul is on here. He's somebody that does. There's a lot of very good, reputable companies out there that do. Credit repair is very legitimate, guys, because credit repair makes sure that everything on your credit report is 100% accurate and verifiable as required by law. Most negative items are not 100% accurate and verifiable. And the law says that if they're not accurate and verifiable, they have to get denied or they have to get deleted off the bank credit report. They can't be on the credit report. They have to be updated or removed. So I found in working with reputable credit repair companies that you can easily get 80% or 90% of derogatory items removed from your credit report permanently because they never should have been there to begin with because what's being reported isn't accurate. And this is why I'm not a real big fan of the credit bureaus, because in owning a credit repair company and being in lending for 17 years, I've seen well over 10,000 credit reports. And what's interesting is that as many of them as I've seen with inaccuracies, which is the most of them, I've never seen one account ever on a credit report ever be inaccurate in a way where it helps the consumer. That's kind of weird, right? Every credit report has errors that hurt you. None of them have errors that help you, which seems kind of interesting. So all I'm saying is that, there's a lot of stuff that could very well possibly be intentionally manipulated on your credit in a way that's illegal and can't be done. This is where credit repair comes in, and working with reputable credit repair companies will help you fix those inaccuracies, will help you fix all aspects of the FICO score. And that's what a good company can help you do out there. They can help you fix all aspects of the credit score to improve all aspects of FICO, but then that's also going to improve all aspects of Vantage Score. And by getting things like, foreclosures and old late payments and stuff like that shouldn't be there removed, you improve your mortgage industry score. You improve your auto industry score with the repairing of repossessions and late payments on auto loan. So even though all the stuff we went over, it's all different. Vantage from FICO and scorecards. One thing that is the exact same is that when you have good credit, it's good credit across the board. Your Vantage score will be good. Your FICO score will be good. Your scorecards will be good. If you don't have good credit, if you have damage on your consumer credit report, best advice is to get with someone like Paul who's on this live stream, or the multitude of other very good credit repair companies that are out there. Give them a shot and see what they can do to help you, because from my experience, you'll be very, very pleased with what they can do. And that matters in my world because your consumer credit scores will determine the rates and terms that you pay on business loans in almost all cases. Even though you can build business credit and get all types of credit accounts that we've looked at here before, with very high limits that have nothing to do with your personal credit. None of these approvals that you see were based on personal credit. Personal credit wasn't even looked at for any of these approvals. And in the weeks to come, we'll dive in and dissect how to do this. As important as business credit is, reality is when you get a business loan, what matters is all three types of credit in many cases. So even though you can get all kinds of business credit card approvals, regardless of personal credit quality, for any kind of consumer loan and business loans, real business loans, SBA loans, for example, they're going to care about all three types. They're going to care about your consumer credit. They're going to care about your business credit scores. They're going to care about your bank credit scores, okay? So that being said, it's very important that you focus three consumer credit, business credit scores, and bank credit scores as an entrepreneur, because as a business owner, they will all come into play. They are all important. And let's be honest, a lot of business owners don't have good personal credit because we're by default risk takers. And the credit reports reflect that people take that risk. But you just need to know that you don't have to live like that. There's all kinds of hacks and tools that can be used by reputable credit repair companies that can help you fix that stuff. And again, guys, I don't offer credit repair, so I have nothing to gain by telling you that advice. I'm just telling you the advice because coming from somebody that's owned a credit repair company, credit repair is completely legitimate, completely effective if you're working with a good company. So my advice is that you pursue it if you have any issues with your consumer credit scores or consumer credit profiles. So Alex, welcome today, right? As I'm getting ready to wrap up. So I'm going to wrap up today. So in summary today, we've talked about a lot of wrap this up because this is the last time we're going to talk about credit for a while. Then we're going to jump back into business credit. Remember, you have three types of credit as a business owner. You've got your business credit, which is based on your business EIN number, not linked to your social. And whether you look at DNB's PAYDEX score, Equifax's credit risk score, or Experian's IntelliScore, the main scores used in the business credit reporting agency, what matters most is that you pay your bills. Dwight, feel free to give us a call. 877-600-2487 is our number, 877-600-2487. What matters most is how you pay your bills. If you pay your bills prompt with DNB, with Equifax, paid as agreed, with Experian, 85% of your scores based on payments, derogatory items, historical behavior, it's all payment history. If you pay your bills as agreed with business credit, you get good scores. That's all that it comes down to. If you want to take a deeper dive, if they have your financials, that also helps with some of your scores. But the main thing with business credit is to pay your bills as agreed. When it comes to bank credit and the credit score that your bank has about you, what matters most is that you keep at least $10,000 in the last 90 days on average as an ending balance in your bank account. If you don't have that, don't worry. It only matters if you're applying at a big conventional bank. So if you're going to get an SBA loan, you will not get approved unless you have this kind of score higher, this much in your bank account or more. If you're going to get a cash advance or any of these other type of alternative lending options that we've talked about, collateral-based financing and cash flow financing and credit, then the bank credit score doesn't matter. It only matters for big conventional bank loans. But you should know that how you manage your bank account, having more money going in than coming out,
not having non-sufficient funds, consistent deposits, how long you've had your bank account open, the type of products that you have open with your bank. Most importantly, how much you keep on average in your bank account is essential to having a good bank credit score. And then today we wrapped up the third week and final week of talking about credit scores, where we talked about right here consumer credit. And even though Vantage scores and Fico scores are different, what matters most is that you pay your bills as agreed, that you keep your credit card balances low in relation to the limits that you have, that you have credit history that's long-standing, that you don't apply for too much credit in a short period of time, and that you have a good mix of credit that you're using responsibly. Elaine says, hey Ty, if you are late paying on your business credit, is there a way to get the score changed if the following month's bills are paid on time? Well, the scores will self-correct themselves.
What's nice about business credit is that I've seen people with $10,000 write-off collection accounts that they offset it and have excellent score with 2 paid as agreed $100 limit accounts. So what matters with business credit scores, remember, is that your scores are based on how you pay all of your accounts. So Elaine, if you go late on an account, don't worry about it. Pay that account on time in the future and get more accounts added to your business credit report that you pay as agreed. At a very short period of time, adding more accounts that you're paying as agreed will quickly offset the one time you did go late, and then you'll see the damage repair itself very quickly. Business credit scores are much more forgiving than consumer credit scores, guys. They just are. Consumer credit scores, when you do damage, if you're not using credit repair, man, it could take years to correct. With business credit, you can get it corrected in months. At the long period, you could get it corrected in 1 to 2 months. It's just if you go late a month, great. Go on time in the future, and also add more accounts with good payment history, because unlike FICO, where 35% of your consumer credit score is based on payment history, 100% of your Equifax and DMB and 85% of your Experian is based on payment history. So just offset the negative with a bunch of positive, then your overall payments are positive, which offset that one time you were negative. It's very easy to correct. It's just about having more accounts you pay as agreed and less accounts you don't pay as agreed. So hopefully that helps you, Elaine.
So then we've also talked today about the scorecards, about how when you go to apply for a mortgage, go to apply for a car loan, how your credit scores are different than what you're going to see on a normal credit report. And the reason for that is again, they weigh your auto history heavier into the score, or your mortgage history heavier into the score, or your credit card history heavier into the score,
depending on what type of credit scorecard you're actually looking at. So, here we go. It's been crazy. We've done a lot of stuff. The last few weeks, we've decoded bank credit, we've decoded business credit, we've decoded your consumer credit scores. Next week, we're going to jump back to business credit. I don't know what we're going to be covering specifically, but we will be looking at real business credit reports. So if you want your business credit report pulled and reviewed on here, you want to see, without paying $100 to see your business credit report, what it looks like with Experian, or then come on, next Thursday at 11 o'clock, we'll review your business credit report. Won't cost you any money. You'll get to see exactly what Experian's reporting about you. Even if you think you have no credit reporting with Experian or Equifax or DMB, it's at least worth taking a look, because a lot of people don't think they have credit and they do. And I'm going to do that for you at no cost. So I'll go ahead. I have a commercial account set up with Experian. We can pull as many credit reports as we want to and look at any business credit report. Remember, anybody can see this info. All I need to pull a business credit report is your business name. If you don't have much established credit, I may need the city and state that you're in. But with as little as that information alone, I can then pull your business credit report. So if you give me your business name next Thursday at 11, we'll look at your business credit report. It might need your business city or state your business is in, and we'll review some of those. We'll talk more about effective strategies with building positive business credit. And Dwight says, does your business help repair people's credit score? If not, who would you suggest? I don't deal with consumer credit repair. With business credit repair, I can help you. If you have negative things on your business credit report you need help with, then I'll give you a couple in touch with us. You can go to creditsuite.com/consult. creditsuite.com/consult. You can also go to creditsuite.com/Facebook gives you a free guide on building business credit.
CreditSuite.com consult, you can schedule time. We'll look at your business credit report, see what needs fixed and fix it. And by the way, we have a new way to get information from us. It's called Weekly Text Trading Tips, where we give you videos every week with trading tips relative to kind of some of the stuff we talked about today and more. You could just text the word tips to 855-982-1820. And Dwight, if you're asking
consumer credit repair, no, I don't. I don't do consumer credit repair. There's a lot of reputable companies that do. Paul is on this live stream. He's one of those reputable companies that does. So if you communicate with Paul, Paul can help you with any kind of consumer credit repair. Angela says, will it be hard to get startup business loan without business credit? It depends. You know, not necessarily as a startup. I have this from last week about 15 or 20 approved denials from On Deck because people got denied because they didn't have established business credit. Those are for merchant cash advances. You can't get those until you're in business 1 year anyways. But it depends on what kind of start you're going to get. So remember, you can get all this kind of business credit regardless, Angela, of your personal credit report. This is what we'll be diving into in the weeks to come. So you can get high limit store credit cards. Like she just got a Ford auto loan. She hasn't picked a vehicle yet, so we don't know the amount of the loan. She just got a $40,000 fleet credit card and $7,000 BJ's credit card all this week. These are all in the last week that she got, regardless of personal credit. No personal credit check or personal guarantee. You can get all this even as a startup. This took about 90 days for her to obtain all this credit that you're seeing here. The other type of credit that works for a startup is this. It's called unsecured financing. You can get up to 150 grand and 0% financing. It's no doc and it works for startups. But you have to have good credit for this program, where you don't need good credit for this. You do need good credit for this, or a guarantor that has good credit. Also, remember, Angela, if you have any of this kind of collateral, 401k, IRA, stocks, or bonds, you can get credit immediately as a startup with low rates. If you have, for example, inventory or purchase orders or equipment you're looking to borrow, any kind of collateral-based financing. Guys, thank you guys so much for sharing this. I mean, I really appreciate the comments, the engagements, and the shares. That is so awesome. It means so much, so I really appreciate you doing that. Any of this kind of financing, collateral-based and credit-based financing, can be obtained as a startup. Remember, we've talked about the 3 C's of lending. Cash flow financing you can't get unless you've been in business typically a year or more. So hopefully that helps you, Angela. Yes, you can get all types of business credit, which we'll be talking about in the weeks to come. You can also grab a free guide on building business credit at creditsuite.com/Facebook. You can also come in and schedule some time to talk with us more. We'll pull your business credit report for free at creditsuite.com/consult. If you do have cash flow, you might qualify for cash flow based financing. It does not care about personal credit quality. Even as a startup, you can get collateral or credit-based financing. For collateral-based financing, you have to have some kind of legitimate collateral. Here's a lot that's mentioned: 401k, IRA, stocks, bonds. Commercial vehicles will work. We do house reseller or flipping financing is available out in the marketplace today. If you're an insurance agent, book of business financing might work. Commercial real estate, equipment, inventory, purchase order, account receivable financing. The bottom line is, do you have some kind of legitimate collateral that can get you financing even as a startup? If you have good personal credit, you're golden. Or if you have somebody in you that will sign for you as a guarantor, you're golden, because this is no doc financing. I've never seen a better program that works for startups, because you can get up to 150 grand at 0%, which works great. And Quentin says this is great information. Thanks, Quentin. I appreciate it. So that will wrap up for today. Next week, we'll be diving into business credit. I'll be getting back into mapping out how you can obtain high-limit business credit accounts regardless of personal credit quality and without a personal guarantee. We'll be diving into real business credit reports. I'll pull your business credit report, review it for you live right here, where it costs you no money to be able to do so. If you don't want to do it publicly and you just want to have your business credit report privately, well then go to creditsuite.com/consult. We will give you a copy of your credit safe report. We will pull your Experian report and review it with you. We can't give you Experian report because Equifax, DMB, and Experian commercial, they won't allow us to give a credit report to anybody. We can just pull it and review it. So I can pull your Experian and review it, give you credit safe at no cost. You just go to creditsuite.com/consult if you'd like that. Or if you want to do it here and actually review it and not do a one-on-one call, then we'll do that next Thursday at 11 o'clock as we dive more and talk more about business credit. And Alexander says, hey, Ty, I came in late, but thank you for everything. Well, thank you, Alexander. Thanks for coming. Thanks, everybody, for coming. Thank you guys for sharing. There were several of you sharing throughout this. I appreciate it. If you did come in late, go to our Facebook page. Go to facebook.com/credit suite. You'll find our page. You'll find this live stream. You'll find our other live streams where we've decoded all of it. On our past live streams available on Facebook, we've talked about business credit, the benefits of business credit. We've talked about each step in depth in the business credit building process. We've looked at actual business credit reports of people like this and see not only they got these approvals, but we've seen it on their business credit reports. We dissected in depth 3 alternative ways you can get business loans even when you can't get loans at your bank. We decoded 3 types of credit: consumer credit, business credit, and bank credit. We've done all this on these live streams. And every single one of them is available on Facebook that you can go at your leisure, play in your background as you go about your day and learn some information that's actionable that you can immediately take action on and start seeing results, which is cool. It's the only kind of information I love, which is information that's actionable, stuff that you can actually walk away from a training and go, okay, I can take action on this right now and see my life change for the better. So you'll get a lot of that on our main Facebook page. Hate came in late. Alexander, you've started to change my business. Thanks. I appreciate that greatly. I really do. And if that's the case, then make sure you communicate with us. Let us know how your progress is. You can see here with Mark and Christine, they keep us actively engaged and let us know how the progress is, and we share that openly. So I appreciate that. Dion says, real quick, can you show the whiteboard that talked about Quill, etc.? I will. And before all these comments go too far where I can't see them, can you go back to the other whiteboard and show the notes you talked about Quill line? Yes, I will. I'll do that right now. So here we will dive into this next week. Dion, these are some of the vendor accounts you can use to start building your business credit. Uline, Quill, Monopolize Your Marketplace, Gimplers, and Seton. Gimplers and Seton, guys, these don't have stuff you would normally buy. Myself, I buy first aid kits at Seton, and at Gimplers, I buy batteries. Because, you know, you always need batteries and you always need first aid kits, especially when you have kids and office workers too. So Gimplers and Seton, you can buy those type of things. And believe it or not, Seton, you can buy road signs, which I had no idea you could actually just go somewhere and buy, but apparently you can. So there you go. So you can have your own parking space with your own sign. You can buy it right there at Seton. And Anar says, what's the website again for the free score? creditsuite.com/consult is where you can schedule time with us. We can't give you a link to actually pull your report. It just doesn't work that way. We have to pull it. So creditsuite.com/consult will pull your report. Alexander said, Ty, I have a question. I'm stuck. I got denied for Gimplers. All I need is one to get 5. What can I do? Yeah, Gimplers is not easy. Gimplers is one of the harder starter vendors to get. So my advice is to go to another one. Use Uline, use Quill, Monopolize Your Marketplace, Seton. Granger is another one that works okay. Office Depot might work okay for you as well. And then wait for those to report. If those report, you typically will get Gimplers. Or my other advice to you is to buy things from Gimplers anyways. Buy 2 rounds of stuff from them and then go back to their underwriting department and then ask them if you can get reapply. Say, look, man, I bought stuff a few times from you guys. I'm going to continue to, but I'd really like to obtain credit along the way. I'm only asking for a $100 limit, but buy things from them 2 times, then go back and ask them for reconsideration. That oftentimes works for Gimplers as well. So I gave you a few ways around the Gimplers approval. Hopefully that helps you. Vista, Paul was saying, there's a bunch of vendors out there, but those are some of the easiest ones to find. And guys, we're working on some cool stuff right now. We're actually working on some vendors, some of our customers, or some of the, not customers, but some of our relationships that we have. We're actually helping them report to the business credit reporting agencies. So they'll give credit to anybody and they report. And we're helping them right now with the process with Experian. I don't want to share this too early, but I will say that I'm meeting with Experian tomorrow to finish up our reporting to Experian. We're going to start reporting our services to Experian as well. That's been something we've been thinking about for a while. We're now pulling the trigger on. So there's going to be more options we'll talk about on these live streams for vendors, because 97% of vendors don't report. So our new strategy is, well, instead of trying to find ones that do, let's create ones that do. So we're helping people around us to have real reputable companies and products report to the business credit reporting agencies, where they'll give you credit even if you have none, to make it easier for you guys and gals to be able to access starter vendor accounts. You say Granger reports in July. I'm not sure when Granger reports, if it's monthly or quarterly. It's worth asking them. They don't do it 1 month of the year. They either do it monthly or quarterly. Most of them are monthly. And Alexander says, thank you so much. God bless you and what you do for us. Hey, thank you very much. I appreciate you coming and making this real, giving me positive feedback, helping us improve. But remember, it only matters if you take action. Alexander, you're taking action, so I really appreciate that. I want to see everybody have success with this. Business credit's very important to me, and many of you know my story. I almost lost everything I had because I personally guaranteed stuff for a business because I didn't know another way. So it changed my life in the fact that once I learned about business credit, I decided I wanted everybody to know about it. And I just appreciate you all openly receiving the information and applying it, telling others, sharing that stuff. I can't tell you how much that means. Can I foreign file in another state and get funding? Yeah, you can, but business credit's easier to obtain than business funding. Business funding leads me to believe you're talking about loans, and you just got to know loans are going to look at one of three things I mentioned here. If it's a loan you want, you're going to have consistent cash flow for the business, good personal credit, or collateral. If you have none of these, you're not going to get any kind of business loan. Then what you need to do is focus on building your business credit while you're working with a good credit repair company, building the business to get the cash flow, and maybe obtaining collateral. That's the better way to do it. So, Alan, I hope that answers that question. I'm going to go ahead and wrap this up. Next week, we're diving back into business credit. And we're also going to be diving in and pulling business credit reports live on the stream. So if you want your business credit report reviewed at no cost, come on the stream. We'll pull your Experian report and we'll see what's going on as of next Thursday at 11 o'clock Eastern. And Alan says, I meant business credit. Sorry. Can I foreign file in another state and get business credit? Yes, you can. But it will be problematic. If you file a business, and I see what you're saying, and let me give you an example. It's $70 to set up an entity in Florida. It's $600+ to set up an entity in California, $600 in Nevada to get a business license, for example. So a lot of people say, I want to go to a cheaper state. You can do that, and it won't affect your ability to build business credit. But to create a credible business in another state other than you live in will have its share of problems along the way. So just think about it. You're probably better off to try to find a way to come up with the money to do the corporation, the entity of that, and have it right from the beginning, then try to get around it. But if getting around it's your only option, filing a business in another state other than you live will not be prohibitive of you getting business credit. But you will run into obstacles as you try to create a credible business that way. Just so you know, filing of taxes, those type of things. There's going to be a lot of questions of why you own a business in one state, live in another. When you get to getting business loans, that question will become an issue. So as your business grows, it will be problematic, but it doesn't hurt your ability to get business credit. You can do it. So hopefully that helps you. I'm going to wrap up. Thank you all very much for coming today. Thanks for the shares. That was awesome. I've never had a video with this many comments. I know because Facebook just told me. And I've never had a video with this many shares. I know because Facebook just told me. So I really appreciate that. Thank you all for coming. Thank you all for sharing. I look forward to seeing you next Thursday at 11 o'clock Eastern, where we talk more about business credit and we pull your business credit reports live on the stream where you can see what's on your business credit report without paying a bunch of money to do so. So I look forward to that. Thanks, everybody. Have a great end of the week. I look forward to seeing you next Thursday at 11 o'clock here on Facebook Live. Thanks, everybody. Have a great day.